All right, guys. What is going on? What is good? What is good? Hope you guys are ready to learn some today. Are you guys ready? Drop some ones in the chat if you guys are ready to learn something today. We are talking about where did it go? Market Wizardry made simple. MWMS. Market Wizardry made simple. You guys ready for that? Are ya ready for that? I would say, more importantly, are you open and willing to learn? Because not everybody is. Some people, we ain't gonna say names, but some people watch me and don't learn shit. And it's sad because you are wasting your time. And you are better off doing something else. Okay? If you watch me and you don't learn, if you don't take notes, hell, if you just straight up don't like me, go somewhere else. Simple as that. Unsubscribe. Go somewhere else. Okay? But you know why people show up? You know why people follow me? You know why we have 180 something members? Because people learn here. People are doing better than when they started. Okay? So, yeah. Not that I want to get into that today, but, you know, if you don't find value, piss off. Sorry, my boy hit me up and he he doesn't text. He's one of those people, I love him to death, but he's one of those people that he texts back like every 3 days. You know, like, y'all know those kind of people. When you got them, you got them. But then once they stop replying, it's like, all right, I'll see you next week. You know what I mean? It do be like that sometimes. Anyway, I got some stuff for you. Hopefully you guys brought a pen and paper. There's going to be a lot of nuggets today, at least 10. Probably 11 or 12 or however many, but I have at least 10 for you. Okay? At least 10. So if you do not have a pen and paper, go grab one now while we do the intro, and then we'll be good to go. Or you'll be good to go, okay? Let's see, what's good? Marshall Scott. Is it just me, or did the @ symbol come back? Did the @ symbol come back in front of people's names again? Or has that always been there? I don't know. This is throwing me off. What's good? Marshall, Scott, ER, Mason, Eberneth, Soul, Capitalist, Pip Trades, MJ 2020. I cannot fucking read the names today. Julius. And everybody else. Been there for a few months. Ooh, okay. Well. Alrighty then. Thank you, Mason. You're banned again, like for the 8th time. So that was a trap. You fell into it. What's good, Jordan D? Finished the boot camp yesterday. The last video in there was mind blowing. What video was that, Robert? There's a lot of, bro. There's over 1,000. I think it's like 1,100 videos altogether. Which one? We gotta have a title. Got my cafe mocha. That doesn't surprise me at all, Jordan. That doesn't surprise me at all. Oh, Keys to the Kingdom. Man, that's a good title. That's a good title. Whoever came up with that is a genius. Yeah. Oh, shit. I had to do that. Okay. Let's get into it, chat. Let's get into it. Market Wizardry made simple. So, in the last couple weeks, we did a review, right? Back to the basics. Back to the basics. There was another video that I did recently. It was the obstacle is the way discussion, a brief discussion on trading struggles, and I think it was like point number 5 or 6. It was one of them, and it was get back to being a student. And another one was get back to the basics, right? Understanding what is a high probability target, what is a good stop loss placement, right? Where price should go, where price shouldn't go, right? Top down analysis, stuff like that. Do you guys remember? He said it gives me superpowers. Yeah, caffeine does the same for me. It does the same for me. That's why I say the things that I say, and a lot of them on Instagram are not structured. They're just, you know, random thoughts, somewhat well put together. So I was going to read you that today too. Yeah, if you don't like caffeine, then yeah, you probably wouldn't know what we're talking about. So you're out of the circle. You're not in the know. So good luck to you. There was man, maybe it was a couple weeks ago. Let me do this real quick. I have to look through my archive now because this was a couple days ago. Okay, here we go. All right, so this is what I had said on my Instagram story on the 19th. Okay, so this was Wednesday then. Yeah, this was on Wall Street Wednesday. Okay. So I had said, do you know what it feels like to be dialed in? Or, as Mark Douglas framed it, in the zone. Do you know what it feels like to have an exact understanding of where price is going next? To know why it will go there? To place a trade knowing you have to place a trade knowing you have highly privileged information backing you up. Knowing exactly who's in open profit, who's in drawdown, and whose trailing stops are up next on the chopping block. To see the chessboard and all its pieces, knowing the pawns are about to get smashed and your queen will checkmate after. While most are playing checkers, struggling, getting it wrong, falling for common information, tweaking the indicators, adding more indicators, searching for another winning strategy. But not you. You, the reader, the listener, the YouTube watcher, know that uncommon performance comes from uncommon knowledge and an uncommon work ethic. Studying while others are scrolling through social media and going through brain rot. Going in depth and moving well past the surface of things. And I misspelled past, but we're not going to talk about it. You don't need things, you don't see things for what they pretend to be. You know most things are just an illusion, so you look for the truth. You are not easily fooled. You question the crowd. You don't associate with them. You want better for yourself. You see what most people do as stupid and wasteful, because it is. Learning to read price and learning how to trade will open up a lot to you. You begin to see your flaws and your biases. You begin to see those very things in the charts. This is the way. Don't fight it. If anything, pedal to the metal. Not gonna lie, saying that out loud, that actually sounds better than I thought it was. But what do you guys think? What do you guys think about that 5-story sort of rambling? What do you get from that? Do you think I'm just some guy high on caffeine, just Twitter fingers, as Meek Mill said about Drake, right? Or Instagram story fingers, right? Do you think I'm just a rambling guy, or does what I said actually make sense? Thank you, Mason. So you always find your way back here. You get banned when you come back, so you need to pick a side, Mason. I need you to pick a side, okay? But anyway, I'm going to do my best to try and explain it to you. Because again, language, it is a barrier. We have thoughts, we have reflections, and we have to put those into words and then put those words out into the world. And it's not just your message, but it's also how you communicate that message too. It's difficult. It seems easy. Oh, being an educator is easy. No, it's not. You got to deal with a bunch of dumbasses. Not a bunch of them anymore, but every time, every once in a while you get a goober to come across and it's like, Jesus. But for the most part, a lot of the time, I do feel like I didn't communicate the message as clearly as I wanted to. That's why I always ask you guys, like, are you sure? Do you get me? Are you understanding it? Are you getting it? If you have questions, ask. Okay, that's why I'm that way. I want to make sure you get it. Okay. So that portion on when you dive deep into the charts and, you know, and your own performance as well, what you start to see is basically yourself, right? You start to see yourself in a sense. So when you look at it, and this is starting to look like a sell model, I'd rather not see it do that, but it's okay. Whatever happens, I'm already done for the day. I'm done for the week. It doesn't really bother me whatever happens. But what I'm saying is you start to look at the charts, right? And you start to see like, oh, this would have been a buy, or this would have been a short, or, you know, oh, these aren't equal highs, but yes, had them. It's like, oh, those are some clean highs right here. Right there. Like, oh, that would have been a target, you know, XYZ, XYZ. What I'm kind of referring to is the storyline. Okay, let's actually go to the micros because I don't want to, I'm having drawings over here. I don't want to show you those markups just yet, but what I'm saying is when you look at this price chart here, and I saw somebody post this earlier, which is very relevant, but a lot of people go through this. This is what their image was. Maybe you saw it on Twitter, maybe you didn't. Twitter really blows, and you really shouldn't be on it, but you know, you're gonna do what you're gonna do. Okay. Their chart looks something like this, where, and it was colored though, like mine, all of mine is gray, but you get what I'm saying though, right? Like they had the red and the green or whatever. And maybe you've been here before too, where you take a trade, you get stopped out, you know, you take a trade, you get stopped out, and you take another trade, get stopped out, and then the market finally goes your direction, right? Drop some twos in the chat. I'll be the first one. Okay, drop some twos in the chat if that's happened to you before. You tried to catch the low of the day, fucked it up, screwed it up. You screwed it up, then you tried to do it again and again and again. Maybe you did it 2 or 3 times. You got frustrated, said this is bullshit. Big problem for me earlier this year. Hey, no problem, Mason. I still do this sometimes too. It's okay. Not as much anymore, but I know exactly what you're talking about. Right. Good point, 2020. The mental capital is drained afterward. Right. Makes you not want to trade anymore. And then what have I always told you? Here's the first nugget for the day. I really want to go in order, but the first one, the best trades, the best setups, I don't want to say trade, but the best setups are right after everyone else gets stopped out. So when you see an image like this, right? This is what I see, but on a blank chart. Okay? I don't actually see it, but it's what I envision. You know what I envision when I look at shit like this? I look at trying to catch the low, stopped out. Trying to catch the low, right? Stopped out. You can see it in the chart that every time the market makes a low to rally, right? A low to rally, low, little bit of rally here, low, rally. All of these in here, this one to go higher, this one to go higher, every single one of those instances, there's candles there. There's candles there, which means commerce was done. There was transactions done. And you can see it. People trying to long, stop at the low, get stopped out. Trying to long, stop at the low, stopped out. Every single time. All in here. Right there, right there, right there, right there. Maybe a little bit right here, but more so like right there, maybe right there. The only time the market doesn't do that again is right here. That's the only time. I'll just make it a little bit different. That's the only time. Because the market, it did give a very deep retracement, and I'm sure a lot of people did get stopped out because of the trailing stops from here. Right? When the market, oh, that's a higher high. Yeah, we should go break even. Right? Oh, we should put our stop at the most recent low. Right? They get knocked out. So everyone may not have gotten knocked out on this move here, but at least that short-term low, yeah, some traders probably did get taken out. Right? So we'll say trailing stops at least. Okay? Then, right, we never took that low again. And we took off. For the, well, again, ES, these are equal highs on ES, but that level there on ES was taken. You remember that? Right here. Those are equal. That was joint. That's why I gave that to you. Okay? Is everybody with me so far? Drop some threes in the chat. My main point here for this segment of the video, live stream video, whatever, is that when you dive deep into this stuff, you can see it in the chart. The chart, every chart tells a story. It tells a story. Every once in a while, you'll hear me say, man, today's one of those days traders are trying to go long and they're just getting knocked out over and over again. Right? It also took people out shorting, but I mean, yeah. Some highs taken lower, deep retracement, those highs taken here to go lower. That high here was taken to go lower. So I can see your point there too. Sure. You can see that in the chart. And now, mind you, again, not to start no shit. There's no indicators on this chart. There's nothing on this chart. Nothing. It's just candlesticks. It's just my watermark isn't even here because I put the eyeball on everything. I hit everything. There's just time at the bottom and price on the right. That's it. But it's the context, right? The narrative. What is the story? The story is equities opens, and we start to see that. We start to see traders, and it don't got to be you or me. There's plenty of traders out there, okay? There's tons of them. Tons and tons and tons of traders out there, okay? And you can see that, yeah, they're trying to long or trying to buy a retracement. Trying to long, trying to buy a retracement. Over and over and over and over and over again. Then, once the low's been set, okay, then we can start to look for longs. Now, mind you, I misspelled drive-through, but we're not going to talk about that either. It was at 9:47. 9:47 is about right there. 9:47. I'm in the Whataburger drive-through. I'm getting breakfast, by the way. I'm getting taquitos with the picante sauce. Okay? So if you're going to be jealous about something, be jealous about that. But ES highs look suspect. That's all I said. That's all I said. I didn't point out lows. I didn't point out FAFO Friday's low like I did yesterday before the market, or on Wednesday before the markets ripped ass on Thursday, and everybody's like, oh, well, nobody knew that was coming. Okay, go watch Wednesday's fucking live stream. I told you the higher time frames were bearish. But we'll go with that notion. Nobody fucking knows, okay? The map is not the territory, chat. Which means these smaller time frames, you might think, oh, the low's going to be set. Oh, the low's going to be set. Not yet. Now, at 9:40, did I say 47 or 30? I think it was 47. Right? Again, I'm in the drive-through, chat. I'm not at home on my monitors. I'm on my phone. Okay? It has like 3 minutes. You know, because the screen is so small. It has hardly any data on it. As long as you know what you're looking for, doesn't matter what your screen size is. Doesn't matter. I mean, I think it matters a little bit, just a little bit, but as long as you know what you're looking for, it don't matter. Okay? When we actually put some stuff on here, because now I'll give you some more juice, okay? I'll give you some nuggets now, and I've got them numbered as well. So number one, the market trades to two things. What are they, chat? What are they? The market trades to two things. Two things. What are those two things? Liquidity and inefficiency. Now, an inefficiency, even though it's two things, one's liquidity, one's inefficiency, but the, I guess, column for inefficiency is more than one thing. That would be an imbalance, a gap, regular trading hours gap, new day gap, Sunday gap, right? Inversion could be one. So there's a few of them. It's not just like just one thing, but it's the class of things, okay? So don't get confused on that. But the basis is liquidity and inefficiency. An imbalance is in the class of inefficiency 2020. So that was quite literally on Wednesday, right? Tuesday or, yeah, Wednesday, because we talked about going long in a market that was higher time frame bearish, right? So the next day yesterday was pretty fucking wild, but look what happened yesterday. For ES, we had traded up, and that's why I told you about this in here, because this was some highs in regular trading hours, which I actually thought we were going to do. So I was wrong on that, okay? So how about, what did that person say earlier? Something about humility. Well, I got it wrong, okay? So there's that. I was wrong in like saying what the high was going to be, because again, we didn't do that. But yet, what did we do? The market shat to bed yesterday. Remember that one tweet? Well, there was no news. There was no earnings. There, oh, what about Donald Trump? What's really going on here? Let me see if I can find it real quick. Yeah, no policy surprise, no new recession warning, no tariffs or bad earnings. What the fuck's going on? What's going on is it's doing what I told you it was likely to do. But y'all just don't know. Your pages with 50,000, 100,000, couple 100,000 followers, but you don't even know about liquidity, bro? That's wild. Whatever. But anyway, coming back to what I was saying. The basis for that was what? Liquidity and inefficiency. Do we have an inefficiency in that? Not really. We do have this gap here, yes. But that was traded into once. That was traded into twice. That was traded into 3 times. 3 times that was traded into. What have I always said about concepts that get traded into multiple times? The more times it's traded into, for me, the less likely it is to hold. So guess what? If that gap, here it is. If that gap here, right, there was the first time, there was the second time, that was in the lower end, by the way. And then the third time was on that Tuesday. So do we expect that to hold? Maybe. I'm not on number 2 yet, Robert. But that was number 1. Liquidity and inefficiency. Well, technically, the first one I told you was the best trades are after everybody gets stopped out. So that's like number 0. But number 1 on my list, because I wanted to be a little bit more structured today, was liquidity. The market trades to 2 things, liquidity and inefficiency. So if that inefficiency isn't going to hold, then what is it going to go for? The only other thing on that list. If it's not one, it's the other. If it's not going to respect an inefficiency, it's going to go for liquidity, right? Where's our low of the day? Where is our low of the day? Where is it? Okay, watch this. When we measure, just so you can all see it, right? Look at this. FAFO Friday's low. That was October 10th, that low right there, I'm using a magnet tool, so it snaps right to that. That's 6540.25. Okay? So when we go and refresh the chart, you can see that right here, okay? For today's candle on the daily time frame, right? The electronic side is going to show you that run below it. Right, so if it's not an inefficiency, it's going to trade to liquidity. When we go down to a 5-minute time frame, this is the part where I told you bring your pens and notebooks and stuff, right? Because they keep saying that the stuff's not predictable. I always told you for ES, what can you do with a measured move? You can take whatever the number is, the high or the low. In this case, it'd be Friday's low, right? FAFO Friday's low. And you can drop 5, 10, 15, 20, up to like 25 points. Okay? I never said, yeah, you try to predict the low in advance. No. I did not say that. All I said was when we are looking for a measured move, not for NQ, not for Dow, mostly for like FX majors, but more specifically ES. I told you can drop 5, 10, 15, 20, sometimes up to 25 points. Okay? So watch this. That low, 65.40 and a quarter, if you take 15 points, that gives you that right there. That right there during London. Look at that. Look at the precision on that. Well, John, you're not awake for London. Everybody knows that. But why would that be important to know? Because we got a measured move, right? We tapped into that here. We tapped into it, but we got the measured move during London. So that extension below the old low, that FAFO Friday low, the extension below it, that is what signifies manipulation to me. Okay? This is usually not manipulation. 1 or 2 ticks or 1 or 2 points below an old low, that's usually not a stop run. That acts more like an engineered low than it does like a stop hunt or a raid or a sweep, whatever language you prefer. Okay? So there's your manipulation, right? What did I just tell you? What have I always told you? The best trades, the best opportunities, the best setups are right after everyone else gets knocked out. So number 2, well, I probably should have reordered this, but who cares? Number 2, for high probability trades, we want to trade in the direction of opposing liquidity. We want to trade in the direction of opposing liquidity. What does opposing mean? Oppose, right? Sometimes people oppose me as a person. Oh, you're this, you're that. Okay? Right? They oppose me. If we got a higher time frame pool of liquidity met, then the opposing liquidity, let's say from Friday, like during London, the most immediate pool is going to be that high right there. It's going to be like the current London high, right? That run lower, meeting that higher time frame pool of liquidity. This should be this color, because I said that was that was how I classify manipulation. A measured move below, yes, or above. This would work the same way above it. 5, 10, 15 points above an old high. It's a measured move. Okay. Unconscious incompetence. Yeah, okay. We're not getting that advanced today, but the most immediate pool is going to be there. That would be opposing liquidity, or let's say Asia high. That would be opposing liquidity. The previous session in regular trading hours, so that's going to be like the PM session high, which I think is, or a PM session high, which is right here. That's the final hour right there. The high of the final hour is right there. So there's going to be a pull there too. Okay. So that means we want to trade in the direction of the most recent high, the previous session high, and let me back up for a second. London's high is here at that time. The previous session, Asia high is right there. Prior to Asia is the PM session. The PM session high is there. So we have multiple pools of liquidity. Okay. So we want to trade in that direction. We want to trade in that direction. We want to trade in that direction. You get me? Now here's where things get fun. Okay. Because you might look at this and go, well, hold on, John, that London high at the time, that was already met. Yeah. Asia's high, that was already met as well. So what do I do now? I mean, well, you could target the latest one way up there. You could. But here's the thing. 36 minutes into this. Oh, this is perfect. All right, number 3. Number 1 was liquidity or inefficiency. Number 2, we want to trade in the direction of opposing liquidity. Number 3, ETH, RTH. Okay, electronic trading hours, regular trading hours. Some of you guys still don't do this. You don't swap. It's literally the press of a button. This is electronic hours. You can tell it's electronic because there's no real like gaps or anything. And we have London, Asia, pre-market, all that stuff. When I go to regular trading hours, okay, you get a little bit of a difference. You can see it a little bit easier with these big gaps in here and like gaps like this. Okay. So now this is where market wizardry comes in. Okay. I want to say genius. I really do. I want to say genius just to piss off some of those people that are watching that are like, oh, this guy's an arrogant asshole. Well, look, I know my shit. Okay. So bitch about it all you want, but watch this. That measured move, okay, below FAFO Friday's low already occurred, right? We traded below FAFO Friday's low in electronic hours, but you know when we didn't do it? Well, at our equities open, we haven't traded below FAFO Friday's low in the regular trading hours. Are you making the connection yet? Are you making the connection yet? What did we start with? What did we start with? We started with all of this in here, right? Actually, we were on a 1 minute. I know that things are colorful, but just fine. Equities open is here, right? And remember, Sala might get it. He might get it, or she, I don't know. Sorry. They might get it. Okay? Whoever you are. Watch this. Equities open. People tried to buy the low. Not working. Tried to buy the low. It ain't working. Trying to buy the low. It ain't working. Trying to buy the low. It ain't working. Right. Because what is it reaching for? In the regular trading hours, it has not yet gone to FAFO Friday's low. You guys have no idea, bro. You have no idea the level of nuggets that you get for being here. You have no clue. Literally. Remember this? FAFO Friday's low. And October's low. You'd be correct. Tio, thank you for that. That is October's low. We are in November. Previous month's low is FAFO Friday's low. Right. Didn't you put out a video like 2 years ago And even before that, you talked about previous day high and low, previous week high and low, previous month high and low. See if that's not in my fucking video. Go see. Go check. Go see if I did not include that in that. It's the one with the blue eye on it. Go see if I didn't tell you about previous months high and low. Right? It did that in electronic. It did that. It did its actual like measured move in London. But we had not done that yet in the regular trading hours. But once we did, and again, you can see it with these wicks and these movements higher. You can see traders trying to buy it, trying to buy it, trying to buy it. It ain't working. But my indicators, but my iceberg and all this shit. No, it's going to railroad you. It's you're getting a new asshole. Okay, literally, you're getting. Sorry, ladies, but like, bro, brother to brother, you're getting stretched, dog. Until FAFO Friday's low is met. I'm sorry. You'll have to excuse my language. I'm a bro too. All right, I've been in the Navy. You know, listen. I got some pretty awful humor. All right. There's a reason that I don't like certain reels, so you guys don't see it. Oh, John liked that. What the fuck? Right. Okay. You are going to get railroaded. It doesn't matter. Oh, well, the gap fill. The gap fill, bro. It filled the gap. Right. Oh, but the gap fill. Why didn't it hold, bro? That was a gap fill, dog. Look at the opening gap. Let's take this purple off. Right? That gap. Oh, well, the gap's filled. We should go higher now. Wrong. Wrong. No, no, no. We have to go for Friday's low. For FAFO Friday's low. That's why that doesn't work. Oh, man, gaps are stupid. No. No. It's not gaps that are stupid. You need to reevaluate who and what is stupid. It ain't the gaps. It ain't the concepts. Okay? I know. People get irritated. Damn it, John. You're so smart. And I hate when you do this. Shit, I love it. I love it. You know how many times I've lost money on some shit like this? Shit. There's a reason I know this stuff. Right. Someone raged because their concept wasn't working. Right. Their indicator gave them a false fucking read. Right. That's why they got to go back and look at the settings. It's not the settings you got to look at. You're looking at the wrong shit. You're looking at the wrong shit. That's why that doesn't work. That's why this does. And then I told you about the highs. We did get a fairly deep retracement. I'll give you that. But then we went to the highs that I pointed out. Right. So why can I go into the Discord or sometimes tweet when the low's already been set? Because I fucking wait for the low to be set, dog. And I don't always know. I don't always get it right. There are times I get it wrong. Yes. Yes, I get it wrong. Right? I'll tell you about something that don't work. I missed. Okay? Not today. Right. So there's number 3. Electronic trading hours, excuse me, and regular trading hours. You got to look at both. If you only looked at regular trading hours, in the way that price moved today, right, you would have probably seen that gap like, oh, well, there's some lows and that got swept and now we're trading towards those equal highs. Oh, you know, that's going to be a long. No. This is a small pool of liquidity. You also have Thursday's regular trading hours low open, which now that I have seen this again, that's an engineered low. That's Thursday's low, right? Previous day's low. There's going to be liquidity there too. So there's liquidity at Thursday's low and FAFO Friday's low. Takes all that right there. Wow. Note for lunch on Wall Street. Guys, this is simple stuff. It really is. I mean, am I wrong, Chad? Do you think this stuff is complicated? It's going to trade at 2 things. Liquidity or inefficiency. Is that complicated? Number 2, trade it in the direction of opposing liquidity. Well, fuck. If we've taken downside liquidity, What's the opposite of that? Buy side liquidity, upside liquidity. Trading in that direction. Is that complicated? Is that complex? Have I told you guys to go take calculus? To go to your local college, your community college, and go take calculus and learn all these y equals mc squared bullshit? Have I told you to do that? Have I given you these formulas? A equals R squared over, you know, ABC, whatever. We don't do that. We don't do that. We wait for liquidity to form. We wait for liquidity to be swept. We get a little bit of evidence that we're going to trade in the other direction, and then we're going to get in sync with expansion. If we're going to see expansion higher, then we want to buy it. Ideally on the way down. Ideally on the way down. On the way, this is an up candle, but there was down movements in here, which I'm going to show you in a second. But there's number 3, electronic trading hours and regular trading hours. Number 4 is liquidity sweep, which was the measured move. We went out of order. Well, it's my fault. I'm the one that's streaming for you. But number 4 is this. Okay. How can I trust that this low, right? Because for some people that may not make sense. Well, that old low was taken here and it was taken here. And how did you know that this was going to be the low? Well, that's the risk that we take. That's the risk that we take, right? We already had the measured move. The measured move does not have to occur in both sessions. It doesn't have to do it in London. It doesn't have to do it in pre-market and in regular trading hours. It doesn't have to do that. We already got the measured move in electronic. So this little small, like 1 or 2 points, maybe a couple ticks or something, that is enough to justify that the low's been set. Right there. Okay? Measured move. Then electronic trading hours, or excuse me, the measured move in electronic trading hours, then regular trading hours. That's why I said that. These are the things that I'm looking at. I may not tell you. I may not tell you every single little facet of what I'm looking at. Well, it's going to trade here because of... I'm not doing that. I cut right to the fucking chase. Hey, this is where we're going. This is where we're going, up here. Maybe beyond that, I didn't really want to tell you, like, Thursday's high, which was what you saw in my Instagram story as the other... That was the final TP. Okay, I didn't tell you that. So I ain't going to give you everything. I'm going to give you a lot. I ain't going to give you everything. Okay? If you learn this for yourself, you'll be able to do the same shit. So, but anyway, number 4, the measured move that's already occurred. Once we get that in regular, then we know, okay, the low has likely been set. Now we can start looking for longs up to that. And then if we continue, oh, Jesus. If we continue previous day high or previous session high, the previous day high, I think, oh, we ain't getting previous days high. I don't think so. That's previous day high, isn't it? I mean, if we get that would be great. I don't think we're going to. But whatever happens, happens. Anyway. Looks like a good reaccumulation, doesn't it? Right here. That's what that looks like. In hindsight, obviously, because we've been talking about everything over here and not like in here. But anyway, let's continue. Number 5. Are you guys ready for another one? We did 3s. Okay, drop some 4s if you guys want another one. We got a few more to get through as we approach the 1 o'clock macro. Are you guys ready? Drop some 4s if you want number 5. Number 5, big picture thinking. The map is not the territory. The map is not the territory. That's a mental model. I gave that to you for free in the Mental Models for Traders video. I told you about the book, The Great Mental Models by Shane Parrish. I think it's in there. and some other mental. I read like 20 books this year. 3 of them were on mental models. Okay, I have finished 20 books this year. 3 of them had mental models in the title. Okay, the map is not the territory, which means for me, when I taught this to you guys, I think it was Benjamin Graham or Billy Graham. That might have been the pastor. Benjamin Graham. I don't know. It's one of the old famous guys in trading, and he basically talked about the triple screen and having 3 time frames: your small time frame, your medium time frame, and your higher time frame. Right? We can also include regular trading hours and electronic trading hours within that. Oh, Alexander Elder. Oh, thank you. See? I don't know everything. I don't know everything. So you have to think about the big picture. What is the big picture? Well, the small picture is, and the small time frames, and this is why a lot of people say, oh, don't trade the 1 minute. I'm going to trade the 1 minute, and I'm going to fucking run circles around you. It's because you don't know how to do it. That's why you say that shit. But price does the same shit on all time frames. It's because you get chopped up on the 1 minute. Right. And you're getting chopped up because you're not seeing the higher time frame context or the higher time frame pool of liquidity. That's what you're not seeing, right? So this higher time frame pool of liquidity is literally sitting down here in big red letters or big blue letters. I'm just kidding. TradingView is not going to tell you that. I may not always tell you that. You have to look at the charts, and the charts will tell you that. Once the open, high, low, close has been printed, it ain't going to go away, mostly. Sometimes TradingView does that shit, but 99.99% of the time, the open, high, low, close, you already know. You already know October's low. It formed a fucking month ago. That pool is sitting right there. But because so many traders are just looking at this smaller time frame, oh, gap fill or sweep or all that stuff, that's wrong. That is wrong. You are getting it wrong. You are offside because it has not met the higher pool yet. Once it does that, then we can start looking for longs in a bullish example, right? Because look at today. In that meeting of that higher time frame pool, that was our low of the day. Okay, that was our low of the day. Beautiful. That's simple. All right, so number 5 is big picture thinking. The map is not the territory. Multi-time frame analysis, right? Top down or the triple screen, either one. Right? Top down analysis, multi-time frame analysis. And like we said in number 3, electronic trading hours and regular trading hours. It's not the same. It's not the same thing. Okay, but the context of this is why that happened. Number 6, the order of models. Number 6 is the order of models or the stages of price delivery. The stages of price delivery. Do you remember what the order of models were? Well, okay, you don't have to answer that. In a market maker model, right? In a market maker model, what typically occurs? Now this, listen, this to me is a heavily distorted version. So this ain't going to be perfect, but from the low, the order is 1 is manipulation. Manipulation always sets the low. Manipulation always sets the high. It never does not do that. Turtle soup, a measured move, something on the higher time frame, right? Manipulation's always going to set the low. Number 2 is the low risk buy or the low risk short, right? Manipulation, and then right after that, well, in hindsight, it's obviously here. But manipulation, low risk buy, First leg, second leg. It's that simple. Manipulation, low risk buy, first leg, second leg, continuation. Hold on, John. I'm trying to understand your question. So when we have a higher time frame pool of liquidity, is that how we can look to see what a measured move may look like? So we can get in alignment once the low has been set. Yeah. I mean, there's still other factors too, like Thursday's low as an example, small pool of liquidity just above a high time frame pool of liquidity, and that both of those were met. I probably should have outlined that maybe a little bit more clearly. Thursday's low is here, so it's taking Thursday's low and reaching into FATFO Friday's low. So it's grabbing a small pool and a high time frame pool. But what I said earlier is the measured move has already occurred. The measured move happened in London while most of us are asleep. Some of you are on the stream right now and you're asleep. I know I talk a lot of shit, but if you're not writing stuff down, if you're just going through the motions or you're just watching it like it's Netflix, then yeah, you're definitely asleep. And then you take a fucked up trade and don't know why you lost because you don't look at stuff like this and you're missing it because the map is not the territory and you're looking at the wrong map. If I printed off, if I printed off a map, y'all remember MapQuest or whatever it was, and it was like, all right, I'm in Houston, let me go to California. I'll fucking never go there, but let me go to California, print off the directions, right? And then I printed off the directions for that. And then it gave me the directions to Florida. I wanted to go to California. Okay? But it printed off the directions for Florida. Do you think I'm going to be in California if I'm following the directions to Florida? If I go right when I'm supposed to go left, am I going to get those results? I'm going to end up in Florida and say, what happened? This is supposed to be Cali. We would obviously know a few minutes into that trip that we're going the wrong direction. Smart Money Concepts is a map. Market maker models are a map. Okay? And if you're looking at a different map, and that map is not, let's say, high probability, you're looking at the wrong map. It's the wrong shit. That's why I make fun of the people who had to go back and look at their indicators. Well, my RSI is on the wrong settings. It doesn't matter what settings you use, bro. It doesn't matter what settings you use. It doesn't matter what settings you are using because it is the wrong map. It's the wrong map. This is the map. The measured move. We actually got it twice. Okay. We dip into that, dip into it again. We clear out a lot of liquidity. Then we dip below that in equities. Okay. Now the low's been set. Now we can start looking for longs. We can see everybody else trying to long and getting stopped out. Let them get knocked out. Let them be done. And then we'll step in and go. You see how easy that is? Is that complex, bro? I'm trying to make it as simple as possible. It's just bullet points. So let me clear this up one more time. Number 6, the order of models or the stages of price delivery. Manipulation sets the low. Low risk buys are after that. A consolidation is going to be first stage accumulation. And then the second stage should be what? Faster than the first. Do we see that here? John, how do you know when to start recording for your Instagram story? Well, I got to hold back some secrets, don't I? No. It's just, hey, look, if we're in the second stage and we're about to get close, I'm going to do that for you sometimes. But right? First leg, accumulation. And then guess what? Right here, second leg runs. Right there. Second leg, was that faster than the first? Yeah. Yeah, it was. So under number 6, this part's probably the most complex, but number 6, the order of models or the stages of price delivery, manipulation, number 1. Number 2 is the low risk buy or the low risk short if you're bearish. Number 3 is accumulation and then reaccumulation. Okay? How did we know? How did I know? Because if you actually do a deep dive into my Instagram story, you don't have to do this, but you would notice that I had went long twice, right? And it may not make sense to you. Well, that's a weird ass entry. It was a sniper entry though, but it was kind of weird. I don't get it. I know a lot of people don't get it. That's why I fucking teach it to you. It had nothing to do with crossing 50%. I mean, that is part of it. You're right. But we crossed that like over here. We'd already done that. We had already done that. I got to show you the suite. And then we'll probably go over the session, obviously, because I didn't do this as fast as I wanted to. I just have a lot to give out, honestly, obviously. November 18th. Okay, what was that? I don't know, John. You tell me to stay off Twitter, but then you show me your tweets. I know. Low, high, higher low formations. Well, this is getting irritating, isn't it? Yep, probably is. Okay, we'll just kind of put this over here. All right, well, I guess I can't move it any more than that. Low, high, higher, low, right? Low, high, higher, low. Can form, where's my chat? Can act like a mitigation. Right. So what is that right there? Bang. Look at that. Whoops. We got a lot of stuff on here now. We're getting super dirty today. Right there. See that? Okay, we're just going to take our gap off because that is getting a little messy. But do you guys see this? Low, high, higher, low. We trade through it, and then right there at 1023. See that? See, we trade down and into it right there. Boom. Yep. Then we trade higher. This is not the equal highs. That is not the equal highs either, right? And then watch this. If you look at my other entry, you see that too. You see that right there. Boom. Perfect. The bodies are staying inside of that. Crazy, huh? Look at that. Bodies are respecting that. The wicks do trade outside of this a little bit. I'm not really too sure what it's referencing. It doesn't even look like it's referencing anything over there. I guess maybe this inversion. Oh. What was once bearish becomes bullish. Oh my God. But this stuff doesn't work. Inversions are stupid. Okay. Look at that. Look at that. Law of the return, Jordan. That's right. The law of the return states, I don't know the exact wording that I made, but what was once bearish becomes bullish, right? But we already set the low. We already had our low risk longs. Entry number 1, entry number 2, the highs I told you about, exit number 1, and then exit number 2. The exit number 2 is what you saw on my Instagram. And you saw the entry, the exit, and the exit. Need not capture the whole day's range. Now, in hindsight, yeah, I probably could say, well, maybe I should have held one for the rest of the day, but I really didn't plan on going into that trade with that idea. I really just wanted to get the highs. Okay. Now here's another one. I know we're losing a couple of people, and that's good. You get the first 5 or 6 and then you miss out on the rest. That's fine. That's honestly, that's totally fine to me. Remember, I'll take everything off now. Remember liquidity and inefficiency, right? So when we look at this run here, okay, do we have inefficiencies? Well, we have a gap here. Sure. Do we have anything above these highs, right? So look at these equal highs and then to the left, right? So immediately to the left, do we have anything in there? Do we have any imbalances in there? Yes or no, chat? Do we have any imbalances within that? Above the high, we look left. Before we cross the street, we look both ways, ideally. Right? So we don't get smacked. Do we have any imbalances? We don't. So what do you think is likely to happen? I mean, you already know what happens, but just bear with me here. Based on your notes, based on what we've been talking about for years now, if it's going to trade to 2 things and one of them isn't there, it's either going to trade to liquidity or inefficiency. If there's no inefficiencies, what is left? What's left? Liquidity. Right. Right there. How far can price go above a high? The next inefficiency, or the next gap, the next imbalance, something like that. Well, guess what? If there's no imbalance, what is it going to reach for? Another high. If we look left again, right? If we do get that high, okay, great. How far can price go above that? Well, let's review. Do we have any imbalances? Nope. Not really. So then that high might be likely. Now, I would say don't skip the other time frames too, but at least on this time frame, ain't shit there. Right. So what is it going to reach for then? It has its pullback, right? But it's reaching for that. Look at that. Wow. So complex, so difficult. It's not. All right, we got to speed run these last couple real quick. Number 7, patience, patience, patience. Okay? I'm going to say that one more time. It's 3 times. Number 7 is patience, patience, patience. You have to wait. You have to wait. You have to be patient, chat. Okay? We've had discussions on this. We've had live streams on this. I've had PDFs on this. Or I've given you guys PDFs on this. This is the type of stuff I'm talking about. You have to allow the market to dupe everybody else. Be patient. Let them get knocked out. And don't worry about missing the move. You don't have to catch the lowest low. Okay? It would be better to be on side. It would be better to trade right in here. Right? Anywhere from like this low, like that, all the way up there. Imagine buying anywhere in that. Anywhere in that. If you bought that today, you're up with no drawdown. No drawdown. No drawdown. None. Maybe like a tick or two, but you get what I'm saying. There's no mega pullbacks in your trade. There's no mega pullbacks on that. It's almost straight green. Even the add-on, straight green. Part of that ego is trying to catch the very low. Exactly. Exactly. You don't have to do that. You can get in after the low's been set, or a little bit later, or a little bit later. Usually, I would not get in an entire position right before the move. If you're going to get in right before the final move, that's only good to me for an add-on. Okay? You can add on for the final move, but I would not open a position like 3, or in this case, it'd be like 10. I wouldn't open a new position 10 points like prior to that. Because then, yeah, you're going to potentially have that mega pullback. You don't want to do that. Okay? Number 8, AMD. We really don't have that here all that much. Again, like I said, with the market maker model, it is a little bit distorted, but it's still there. The C8 logo is kind of still there too, but whatever. Accumulation, manipulation, right? Because that was the low below FAFO Friday. Well, technically, I guess it'd be up here, but accumulation, manipulation, distribution. Where do you see me going long? In the distribution higher, right? Number 9, relative strength analysis. If we go over to YM for a minute, okay? If we look at YM for just a minute, we usually don't do that, but that's okay. We are today. Look at Thursday's low. Do we trade below Thursday's low? So complex, right? It's either yes or no. Did we trade below it or not? Right? The answer is no. We didn't trade below Thursday's low. But you know who did? ES. Wow. Life-changing stuff here. Knock your socks off kind of stuff here. Right. ES trading below Thursday's low. While Dow is higher. Dow's under accumulation. ES is under manipulation. We already knew that. We already knew that. We talked about FAFO Friday's low on Wednesday. Apparently nobody on Twitter did, but we did. Right? Come on, chat. Number 9, relative strength analysis. Number 10, day of the week phenomenon. Day of the week phenomenon. I told you on Wednesday, higher time frame was bearish, right? Look at the week from this perspective, from either the AMD perspective or like each day individually, meaning, okay, Monday's open, right? That's our weekly open. We traded above it to go lower, right? And then Wednesday was higher. Thursday, even though we did have this like mega wick here, we still went lower and closed lower. So it was heavily bearish. So although they were not consecutive, like Tuesday, Wednesday, Thursday lower, they weren't consecutive. They don't have to be. It's better if they are, but they don't have to be. Friday, okay, in a down week can be a reversal day. It's not always that way. Just like if we have an up week that maybe that Friday is going to be lower. You can see that here actually that it's not, right? That Monday, it was open lower Wednesday, higher Thursday, and then higher Friday. And yeah, that Friday wasn't a reversal day. It wasn't, but it also had traded all-time highs. And I usually would not recommend a short at all-time highs. But does that make sense though? Friday in a down week and hitting previous month's low, hitting that high time frame pool can be a reversal day. This is another one of those things of time, price, and context. The time, it's the day of week phenomenon. So you see how everything comes together? All of there's more pieces than this, obviously, but all of these pieces come together like a puzzle. Friday, potential reversal day. We've already swept October FAFO Friday's low by 15 points. We had a measured move there. Then we met the low again, but at the right time during equities, regular trading hours. On top of the fact, watch, this will be the last thing and then we'll go. I know you guys are anxious to go do other things. If Landman would come out at like 1:15 on a Friday, I'd be gone too. I'd be like, all right, bro, we gotta go watch Landman. All right, season 2. Not paid sponsorship, but it is out there. Okay? Watch this. We talk about liquidity, right? What's the highest high and the lowest low in the first 30 minutes? Well, the highest high is there. It's one of those two. They're equal, so I guess it doesn't matter. It's one of those. There's our lowest low. We already grabbed the lowest low. So what's next? Our equities open liquidity is also equal highs. You have everything in the world aligning in your favor to go up. To go up, not down. Okay, it does go down to the extent of that October low, but that's it. Once that was met, it was game time, the other direction. Okay, so that's why in here, when I'm in the park, or no, not in the parking lot, I'm at Whataburger on my phone, listening to music, trying to tell this guy I want some taquitos, and I'm texting you on Discord saying, hey, those highs are suspect. Right. That's why. Because everything is lined up to go higher. Everything is in alignment to be bullish. Everything in alignment points to higher pricing, not lower pricing. Okay? So there's your 10. Liquidity and inefficiency, number 1. Number 2, trade in the direction of opposing liquidity. Number 3, electronic trading hours and regular trading hours. Number 4, liquidity sweep via measured move. You can do measured moves on small time frames too, but usually it's the large time frames. Number 5, big picture thinking. The map is not the territory. Number 6, the order of models or the stages of price delivery. Manipulation sets the low or the high, and so on from there. It's always in order. It will never not be out of order. Number 7, patience, patience, patience. Number 8, AMD, accumulation, manipulation, distribution. Number 9, relative strength analysis. And number 10, day of the week. Okay? That's market wizardry made simple. It's not complex. It's really not. Okay? There's no math. There's no indicators. There's nothing. But time, price, and context. That's it. That's it. And you're able to get on side. That's all I got for you. Y'all be good. Be blessed. Okay? God, man, this stuff is so fun. This stuff is so fun. That's why I do this stuff, man. But I think I'm going to make an official announcement pretty soon, but I am considering for 2026 to turn Friday stream into members only. I'm thinking about doing that. So then Monday, Tuesday, and Wednesday will be free. And then Fridays will be member only. And I'm going to start like saving stuff for Friday. Mason, I can't do AM streams. I mean, I could do them, but I don't want to promise that, because then I have to force myself to get up, and I don't want to do that. I like what I'm doing. Okay? So with that, y'all be good, be blessed. We'll be here same time, same place on Monday, the 24th. Okay, so have a good weekend. Don't do anything stupid. Make good decisions. And treat each other how you want to be treated. Okay? See you next week.
Нету ни берега, нет